some specific things to which the directors of HBRIC have paid particular attention, and on which it's important to say to you that we have exercised our judgment. Many of the other things that I've talked about up to this point are either matters of fact or they're matters where we rely on specific expert advice that has been submitted to the Board of Inquiry or to ourselves. But on these matters, which I am going to work my way through, Chairman, we have exercised our judgment because there isn't a simple right answer. It's our view that the quantum proposed of up to $80 million to be invested by HBRIC, which depends in part on the amount of capital raised via Tuki investments, thank you, is both appropriate and necessary, together with the large amount of funding proposed from Crown Irrigation Investments, to set an appropriate water price that's viable for both investors and users, that will encourage uptake and will also make the project viable for commercial investors. Secondly, the 5% post-tax internal rate of return on our investment that is modelled in the base case over the uptake period is necessary, together with the low interest rate on the Crown debt, both to set an appropriate water price and to enable early cash flows to be prioritised to institutional investors, prioritised ahead of us, because delaying those cash flows to the private sector or institutional investors would be more expensive for the project overall and more expensive for HBRIC. And the reason for that, obviously, is that if those cash flows are delayed, there's interest on the interest. Thirdly, that the rate of return that is being proposed for HBRIC is less than a commercial rate of return, but in our view that's acceptable under our statement of intent in order to achieve regional economic development. The lower rate of return during the uptake period being less than a commercial rate of return also reflects, we believe, the environmental contributions that I noted earlier on that are made by the project in addition to Plan Change 6. Fifthly, the 10% post-tax internal rate of return that's modelled in the base case for us and all investors after the uptake period is an appropriate and good commercial rate of return on what will be a brownfields investment at that time. Sixthly, in our view, the low rate of return that HBRIC will achieve during the uptake period and then achieve a commercial rate of return post the uptake period mean that HBRIC Ltd should be a long-term investor in the project, at least until significantly more than halfway through the first consent period. HBRIC needs to remain invested in the project in order to get its average rate of return between that low period and the higher period up to an acceptable amount. Seventh, there is some risk, which we need to point out to you, that under a slow uptake scenario, a significant fraction of the debt that is being proposed to be sourced from Crown Irrigation Investments Limited will have to be repaid as a lump sum because the Crown has a requirement to be able to exit from the project. That's described in your paper as a hard exit where a lump sum would have to be paid at around about year 15, maybe it's a little later than that. In such a situation, which I caution we think is unlikely, HBRIC Ltd could be required to fund somewhere between $12 and $24 million of that payback to the Crown. HBRIC does have a number of investments to fund such a payment, if that eventuates, or to avoid making its contribution by allowing other local investors to either take up or expand their equity interests in the limited partnership. And then sixthly, Now, the level of governance representation that HBRIC Ltd will have in the Ruataniwha Water General Partner, which will operate the scheme, is considered appropriate by us for the proportion of equity interests to be held by us. Then recommendation 19 traverses discussions that have been held between ourselves and council management regarding the level of dividends that we can forecast in comparison with reduced cash flows to council from interest and other cash yields from its current investments. And in 19.3 and 19.4, 19.3 in particular, it appears that there may be a shortfall of cash between what we can forecast as dividends and what the council would otherwise obtain by retaining its current investment portfolio in years 2014-15 and 2015-16. Rather than traverse the detail here, I would note that we continue, as 19.5 says, to discuss with council management how to mitigate that impact over those 2 years. I probably should also say, as 19.4 says, that it's our view that we should not attempt to extract more dividends than is currently forecast from the Port of Napier to fill that gap, and the recently publicised issues at the Port of Napier show that the port does have some significant capital expenditures to make over future years, and it's our view that those capital expenditures do need to be made. And then finally, Chairman, before two more points before I turn to questions. In recommendation 20, the conditions precedent that need to be satisfied is set out. Getting the resource consent, we hope to know something about that on the 15th of April, obviously. But nonetheless, that resource consent must be considered workable by all the investors. The subscription of a minimum of 40 million cubic metres of water in water user agreements, completing the capital raise, securing the private and public funding required, and a bankable and acceptable construction contract in our hands. Thought it useful to spend just a brief moment or two on recommendation 21, which notes the counterfactual situation. So what happens if the RWSS does not proceed, either because the Board of Inquiry decisions make that unworkable, or because we can't raise enough money, or we don't meet any of the other conditions precedent, or because the Council declines to improve its investment proposed in the RWSS. Plan Change 6, in whatever form it is determined by the Board of Inquiry, will come into effect, and it will come into effect without the RWSS, without the increased minimum flows, and so on, that are set out in 4.1 and 4.1 to 4.3 here. The existing water users who are linked to minimum flows at a couple of locations on the Waipawa and on the Tukituki will not be shielded from the increased minimum flows set out in proposed Plan Change 6. Existing water users who are supplied by run-of-river and connected groundwater takes will suffer economic impacts from the increased minimum flows in the catchment that are set out in proposed Plan Change 6. The contributions to strategic regional economic development amounting to around $4 billion, $3.7 billion from the ongoing value-added components and another $400 million from the project itself, the construction project, will not be generated. And the employment, 2,500 jobs and household income benefits of $125 million a year that are set out earlier in the paper will not be generated. Chairman, that's taken slightly longer than I anticipated, but I did want to step through those, and we are more than happy to take questions.
Thank you. So just remind councillors and Mr Mohi that anything you want clarified at this stage, but let's be aware that this still has to go through a vigorous council process subsequent to today. So any points of clarification going forward?
some order about how we're going to work through the business case and ask those questions rather than jumping backwards and forwards?
Possibly. Let's just see what volume we're dealing with at this stage. But all questions through me, of course. So lead off, Councillor Scott. What have you got?
Well, in the executive summary on page 8,
This is the
business case
itself. Okay.
Yeah, yeah.
I take it that the process is going to be individual councillors will ask their range of questions, and they'll turn on to the next councillor rather than go through it page by page.
That would be
Okay.
my view. Probably not. Some may have a range of questions. We'd probably break it up a bit if we could. I'd like to finish by morning tea if possible.
Mr. Chairman,
with the recommendation.
Can I just ask about that, because due to an unfortunate loss of the paper by the New Zealand Post in the rain, I did not get a hard copy of this and had to deal with an electronic one, and it's not so easy just to find your bookmarks. So
Okay.
rather than waste time, it would be,
How
from
many
my
have you got?
point of view, it would be easier if we had some flow through the business case.
The challenge with that, though, is
I know.
people miss their point and have to go back and all that sort of stuff. So that's the issue.
Well, if you'll bear with me if I flip through page after page trying to find where my bookmarks are.
Okay,
that'd be
that's fine. So you have one to start with?
Yes, on page 8, Mr. Chairman. I would like to ask Board of HBRIC on the subscription of a minimum of 40 cubic metres, which is a condition precedent on uptake. That seems to me to be a very high figure for initial uptake. Can they?
40 million, not 40, probably. 40 would be quite
Yeah,
low.
40 million, which is nearly 40, close enough on 40%. Could they, there was some indication, has this been agreed by a number of the investors? Where does this particular figure come from? It's a higher figure than has initially been discussed in any of the papers that we considered.
Can I just clarify where we are? Page 5, are you speaking?
Our copy, you may have a different copy.
Yeah, okay. Thank you. So it's the first bullet on page. It's the first bullet on page 5 of the actual business case. Is that correct?
No.
8 of the business case, which is in our attachment.
Fine. Sorry.
Oh, right. So what's going on?
It's under a section headed Next Steps, and it refers to a subscription of a minimum of 40 million
Yep.
cubic. So,
Yeah, the figure's 40 million. It's 40% of the entire reliable water flow, and it's a challenging figure. But equally, this is not a this journey's been going on for 4 years. So now's the hour for those businesses that want to take water to actually indicate where they sit with it. And frankly, I think that meeting that target settles down a number of elements of the capital structure. So.
would like to understand this is totally condition precedent on reaching that extreme, which I think is a higher figure than we have actually previously considered. So is that a unanimous? Is that coming from?
That's a view of every party that's been involved in this particular investment.
Just a follow-up question to that, Chair.
Let's deal with that now.
Yeah, so you've got expressions of interest for 47 million cubes currently, and Andy stated that you've begun the process of converting those into signed-up contracts. Can you update us on where you've got to? What the conversion rate is?
Well, the conversion rate, I can't give you a figure on conversion rate into water user agreements. We'll only be doing that towards the end of the process, so May, June, because this is a process that involves a significant amount of commercial decision making by those parties that are going to convert in terms of financing, debt, conversion process and so forth. But the point being, I think the fundamental point is that we've set the target, and we've got a period of time through to the end of June to deliver it.
So you've got no sense of whether this is looking good, bad, or indifferent?
I think the proof of the pudding is going to emerge over the next few months, actually.
And it would be reasonable to think that people are not going to necessarily sign up to this or to the local investment that's sought until after April the 15th, when they've seen the preliminary decision or the draft decision of the Board of Inquiry. I imagine that there's going to be a significant uplift in firming up interest then, but if I were one of those people, I'd be keeping my pen in my pocket, I think, until the 15th of April.
Councillor Belford.
Just to pursue this further, apparently since the weekend, the so-called Castalia report was put online, which is the methodology and is the basis of the ramp-up that you're talking about here. This is a report that was apparently first tabled in September, at which point it, in theory, could have been made available to the public, since it is a rather critical aspect of how all this happens.
Your question?
My question is, are you aware that the conversion rate of expressions of interest is assumed in that model to be 90%?
Dare I say it, it's not a dissimilar figure from the figure we've just mentioned as the CP, is it? Sure. In terms of expressions of interest.
So you think, so you're comfortable with 90% of his existing expressions of interest?
Put it this way, there are a number of parties that haven't expressed interest who are interested in the contract primarily. So our challenge is to deliver that CP.
The non-EOE people are projected to convert at 20%. The incumbents who hold water are expected to convert off of their current consents to new storage consents at 100%. That's the kind of and that's the base case. That's the base case that is used to support the ramp up of take up on this project. You don't find those to be, as a base case, rather ambitious conversion rates?
What I would say is the expressions of interest to take water are a combination. So for example, of those current irrigators with current consents, the expressions of interest to take water, in their case, is linked to new irrigation.
I understand that, but elsewhere you're offering deals, for example, to deep bore holders to be able to retain those consents and not go into the scheme. So how one would expect 100% is Mr. Apple, in fact, going to abandon those deep consents, particularly if you're giving them an incentive, and then how does that square with 100% of incumbents being assumed to take up storage water? I mean, my point being that this whole methodology, which in part is based on a survey of 49 farmers in Central Hawke's Bay, and a set of assumptions about land turnover, a set of assumptions about these conversion rates, and so forth, seem to be wildly optimistic. And I guess
I was just about to step in there. No need for a point of order. Councillor Belford, the proof will be in the pudding, obviously, won't it?
Well, the question is whether we should be...
Are you suggesting it should be lower?
I'm suggesting we should be provided with scenarios that presume significantly lower uptake rates as means of fleshing out this business case.
Just order, Councillor. The bar has been set high, and we've had that explanation.
The bar is set high because the project isn't viable unless there's a certain level of uptake at the outset, and we could debate, we could debate as long as we liked the methodology of the Castalia report or any other. The fact is that the investors have agreed that this project will not proceed. None of them will be willing to sign up and invest in it. None of the other investors, unless there's a minimum of 40 million cubic metres of water under contract on day one. Our job is to get there, and we'll do our very best to get there.